Hi everyone, today I'm talking about a couple of earnings reports from last week. These companies I've kind of just chosen at random, which I think quite a few people would be interested about and know my opinions on the companies, the earnings reports. In this video there's going to be no Facebook, Google, Microsoft or Boeing because a lot of them stocks I'm invested in. So if you want to see them videos, you can pretty much go on other videos of my channel and you can watch them. One stock I've kind of talked briefly about before, which you'll know about if you watch my videos, and one of them was a company I was invested a long time ago, which once again, if you watch my videos, you would have seen it. So I've kind of picked 5 companies and we'll just talk about them. If there's any other companies that you want me to do, we'll talk about their earnings report, then pretty much just stick them down in the comments below and we'll get through them. So number one stock that I've chosen, Twitter. First of all, the big problem I have with Twitter is that whenever I invest in a company, I try and choose the number one brand in that sector, or the number one, the main producer. So, for example, Boeing is for me the biggest aircraft manufacturer in that sector. Airbus is a big competition, but it's the only competition in that sector. So that's a pretty safe brand. Facebook, biggest social network website, with Instagram and WhatsApp, so that's another reason why I don't invest in Twitter. The only time I broke that is when I invested in Skechers, which didn't work out. That was a bad earnings report, but maybe that's because it wasn't a strong brand, so that's probably where I might have gone wrong. That's one of my investing rules. So that's just something to think about on Twitter. So Twitter actually went down 20% after the earnings report, we can see here. The EPS 17 cents was pretty much bang on. The revenue was a beat. The monthly active users actually didn't get to its target, its estimate, and a weak outlook kind of affected Twitter after the earnings report. I'm not sure who did this at Twitter, but I'm pretty sure they'll be sacked after this. Someone totally got their expenses wrong. They were saying that they were going to get between 350 million to 450 million, and it's actually going to be 450 million to 500 million. Which is definitely not, I don't know who got the figures out, but that's not great to be that far off, so that obviously affected it big time. Twitter removed 70 million accounts, but they say they didn't affect the monthly active users. But overall, Twitter revenue grew 24% year over year. It's like Facebook, there's big money to be made on the advertising side of it, which obviously I think more companies will go down the social media websites where you can actually see like the company's page. For example, say it's like Nike advertising for shoes, you can then follow Nike, like Nike's page. Where on Google, you know, to follow that up Google, you'd have to sign a mailing list, and no one wants to sign a mailing list. So I think social networks are kind of the way they're going to go with advertising. Obviously, the biggest problem is kind of getting people still to join the website, which I think a few people take that into big consideration, like, oh, there's not as many people joining now, but at the same time, that's because most people have it, and you'll still get a slow growth joining on, but that's not the point of it. It's about making them more money out of the website. So as soon as some investors see past that, I think the stocks will carry on going up. But for me, if I was to pick a stock, I would definitely pick Facebook over Twitter. You got to remember with Facebook, you get that WhatsApp, you get that Instagram, you get Facebook Messenger, which is still unadvertised on. Half of them companies haven't been touched by Facebook just yet, just the main actual Facebook page for advertising. So Facebook, that's why I think Facebook's a lot more room to grow, but Twitter's definitely an interesting company, but for me, I would not invest into it. Starbucks rose 0.5% late Thursday after the retailer reported financial third quarter results. That largely tracks Wall Street's estimates. This is where it gets kind of interesting for me. If we look into here at the bottom bit, Starbucks said its global comparable store sales increased 1%. Now, Facebook for me, it's a good dividend, it's a cheap stock, good brand, but when your company's growing at 1%, for me that's just not a company to be investing in. It's nice to pick up that dividend, but a company that goes 1%, that's so close to like not growing at all. You know, that's nearly negative. You know, the big area of China, that's not grown as quick as what it was growing for some reason. So for me, even though it has a great dividend at a good price, there's millions of better stocks to be invested in than a company that's growing 1%. I mean, even if you're a value investor, I'd be looking at like more of the 5% mark than 1%. There's a lot more competition definitely for Starbucks. I would probably say it's Costa, Starbucks are the two main competitors there. yeah, I think it's a tricky time for Starbucks. I would not be investing in Starbucks if I were you. You know, there's definitely better companies to be investing in. Next one, Amazon. Wow, wow, wow. We'll talk about the EPS in a second. So Amazon's been on an absolute tear this year, hasn't it? It's done really well. I think it's up 50% year to date. The EPS was $5 compared to 2.50. I mean, that's like double the EPS estimate. And you know what? The stock only went up 3%, which is crazy. But the thing is, people don't invest in Amazon for the EPS. They invest in Amazon for the revenue. And if you look at the revenue was actually missed. 52.9 billion to 53.41 billion. That's a miss. That's quite a big miss for Amazon. You know, everyone that invests in Amazon doesn't really care about anything. They don't care about the PE, don't even care about the PE. All they want to see is that revenue grow and grow and grow. And for that to happen, I'm surprised the stock didn't go down that it missed revenue. I mean, maybe the big massive beat in EPS helped it, but to be invested in a revenue company like that and then to miss it, that's not a good thing for me. At some point, I think it will catch up with Amazon. I'm just not a fan of Amazon. I mean, over a long hold. Obviously, it's a very safe company, but the price it's at, the jump it's had, and it's just like that revenue focus. For me, it's just not a company that I'd get in. So, yeah, for me, Amazon. I don't blame you if you invest in Amazon for like 5-10 years, but right now for me, just not the one. Intel is one that I watched very closely because a lot of people last year towards the end were saying that Intel is the company for 2018, and it's had a pretty good year overall. It has had a bit of a dip though now after this earnings report, but it's one that I watch closely, especially now that it's making all of the Apple chips. That will make a big difference. But Apple stock fell more than 6% on Thursday following the release of the company's second quarter earnings, which were better than expected. 1.04 per share. Expected was 96 cents. Revenue was 16.96 billion. Expected was 16.7 billion. 77 billion, sorry. The company stated that revenue for the quarter grew 50% year over year, which is up from the 9% growth a year ago. So to be going from just below a double-digit growth to into mid-double-digit growth, and that's really good growth. The reasons why is because there's concerns about the gross margins in the fourth quarter, which is always a thing. Is when companies do these quarter earnings reports and there's some sort of forecast or negative news for the future, it does scare the investors, and then they run off and go invest in something else. But at this point, you know, that news is now known, so it's a good time to be investing into stocks like Intel right now if you were considering investing into it. And you look at this growth of the company as well. The company also raised its outlook for the full year, bringing it to 4.15 in earnings per share, which is really good. 69.5 billion in revenue when they had been looking at 68.3 billion. So with them numbers, if I was someone that was wanting to invest in Intel, which I'm currently not, it's not a company that I'd like to invest in. But if I was someone that was liking Intel, this is like the time when you invest, you buy on them lows and then you sell high. For me, it's not a stock that I'm really interested in getting into, but if you are an Intel fan, this is definitely time to be purchasing the stock right now. And the last stock I've chose is AMD, which had a very good earnings report, and it's actually been on a really good tear this year. The stock that a lot of people used to use for swing trading, if you held that position long term, which I always say you're best off holding this stock long term, you'd be up big time, making a lot of money. AMD shares jumped 11% on Wednesday after chip maker reported better than expected first quarter sales. 11 cents versus 9 cents per share, and the revenue 1.65 billion versus 1.54 billion as expected. So that was a really nice beat. It also provided a forecast that topped estimates. But I think a big thing about the AMD is that a lot of people think that this growth's going to start slowing down now. But it depends on your opinion. If you think AMD can give this growth up, then obviously keep this growth up. It's a good company still to be invested in. But if I was kind of in this stock right now, which I did have a look at it a long time ago, but I never invested in just because of the amount of swing traders that were in it, I would definitely be selling right now. I'd take that profit and go invest in someone else. But it's down to your opinion. If they carry on that growth, and not slow down, then definitely it's a company to be invested in. It's definitely a worry if you're in Nvidia to see AMD doing this well. I'd be interested to see their earnings next week. I might do a video and talk about Nvidia's earnings. But a very good quarter, definitely from AMD. I was quite impressed with their quarter overall. And that's the video for today, guys. Talk about some earnings reports. If there's any what you want me to do, or any next week that are coming out, comment on the video below, and I'll see you on the next video.